welcome to you. Many thanks for joining us on this edition of Almond Finance and Wealth Report. Now, don't forget to remain your source for all the latest information, developments, and happenings in the world of business. The coronavirus is not over, so do your part to stay safe. My name is Lucy Ulugbe. You are welcome. On the lineup this week, first we join Faith and our guest, Professor Segun Ajibola, a professor of economics at Babcock University, on the CEO rendezvous for the continuation of the exclusive session on the impact of the COVID-19 pandemic on the economy, the banking sector in perspective. Speaking in the no-holds-barred session, Professor Ajibola noted that it is not the business of the central bank to go into retail banking. To take a listen.
It is not business of a central bank of any country to lend directly to beneficiaries. It is not. So that is why some have criticized central bank for going into retail banking. That is, it's confusing because you cannot appropriate and reprobate at the same time. You cannot be a regulator and at the same time be an operator.
On this edition, also, we'll bring you highlights from Naicom seminar for insurance journalists that took place recently in Kano State. Naicom used the seminar to intimate journalists about their policy direction for the year. Speaking during the opening session of the seminar, Mr. Gbolahan Adewale Motajo, Deputy Director and Head Research, Statistics and Strategy Directorate, said that the ongoing recapitalization in the insurance industry is born out of the Commission's desire to see financially sound insurance companies that can underwrite big-ticket risks. To take a listen.
There is a pressing need to have financially sound insurance companies that will be able to adequately bear the risks.
Plus, of course, all the other extras we bring you each week on the program. So sit back, relax, and enjoy the lineup. Details in just a moment. Please stay with us.
Now, let's move on to the CBN. Everybody pretty much expects the CBN to solve all of the nation's problem by way of interventions. You hear those in the agri sector, oh, we need intervention of CBN. Those in maritime sector, we need intervention. These need intervention. These need intervention of the CBN. And sometimes, in fairness, the CBN make efforts at balancing, striking a balance with all of these interventions. But you also hear some economists say that, oh, the Central Bank of Nigeria is not a donor agency. So why are they involved in so many things? So I just want your thoughts on that, especially at this time of the pandemic.
See, Central Bank juggles with a lot of balls, and they don't want anyone to drop. The main responsibility of a central bank is to ensure stability in the economy. Price stability, growth stability, liquidity, and so on. But in the process of doing that, we've had problem of what is often referred to as fiscal indiscipline. Central bank will say, let's go this direction from the fiscal side, which is politically motivated. That policy, however novel, however good it is, will be rubbished. Then we start grappling with the problem. That's one. Two, central bank itself has dabbled into some things that used to be the exclusive preserve of the operators, that is deposit money banks and others. It is not business of a central bank of any country to lend directly to beneficiaries. It is not. So that is why some have criticized central bank for going into retail banking. That is, it's confusing because you cannot appropriate and reprobate at the same time. You cannot be a regulator and at the same time be an operator. Then the question arises, who audits the auditor? Who inspects the inspector? Who examines the examiner? And who supervises the supervisor? So that issue is on ground. That should central bank go into this kind of direct rapport with some end users in Nigeria, either be it through an anchor borrowers program or any other scheme of that nature, then the NISTRA. But now, Central Bank is also trying to use the channel of intervention funds. But the question with intervention fund is this: if you ask me, you pass on funds to me, either as for textile industry, either for agric, either for aviation, either for entertainment, and so on and so forth, and ask me to on-lend to operators in that sector. The question is, who bears the risk of loss? If the risk resides in me as a commercial bank, then I will not just accept your instruction on the face of it. I have to do my due diligence. But what we see in this environment is like a sort of, there's a compelling directive to say you must lend this to agree, you must lend this to
entertainment.
And when the thing goes bad, it is the bank that bears the brunt. This time last year, no business was projecting forward into 2020 with COVID-19 in mind.
True.
COVID-19 has come. Even the borrower with the best of intentions might have problem.
Yes.
When that happens, who bear the brunt? Who bear the loss? Risk management is a key element of banking, especially in the area of lending. We've seen few occasions where I think there is a scheme in Lagos State through the trust fund, Lagos State Employment Trust Fund also, where the provider of the fund carries the risk of non-repayment. Then that's perfect. The bank is just an agent linking two parties. So those are the kind of...
Okay, because, now, Prof, how will the regulator, or how can the regulator and the operator get around this disconnect? Because when you find those intervention funds released to commercial banks for lending purposes to identify groups, and in the process the banks are doing their due diligence, so to speak, the identified group cries back to the central bank that, oh, these people, they are not releasing the funds to us, and the banks are seen as the problem, not the central bank. So how can the regulator and the operator get around this problem?
Let there be risk sharing formula. There have been some ideas in this environment. For example, if a bank receives 10 billion from central bank, that's one bank, to lend to maybe the entertainment industry, on the understanding that if anything goes wrong, due to no negligence of the bank, then this is how we will share the risk. Maybe I, as the provider of the fund, I will bear 70% of the risk of loss. You, as the operator linking the customer, you will be at 30%. After all, you earn income. You make use of the money to generate some revenue, so you'll be at 30%. Then there will be an inducement, there will be an incentive to go all out and look for those customers, carry out due diligence, and pass the intervention funds to them. But when you say, irrespective of what happens, like act of God, force majeure, and a borrower under that scheme, through that intervention fund, is unable to pay back, and I carry 100% of the risk, how have you encouraged me to partake in such a scheme? That is the problem we have in our land. So we need to redefine the template and look at how best we can manage such risks.
Okay, Prof. Moving on as we come around, let's talk about the last round on the central bank efforts on unification of the exchange rates. Is this the best solution for Nigeria? Then the second aspect of it, is this the right time for this policy implementation? Because many have said that the timing is nothing short of the CBN trying to deplete our struggling external reserves in a bid to continue to defend the naira.
Foreign exchange management is another Hydra-headed problem for any regulatory authority in the business of banking. Let's take the last 20 years, for example, or since 1986. If official exchange rate is 50 naira to a dollar and the unofficial is 70 naira, somebody will say, I want to unify, so I want to take the official to 60. The following day you will wake up, the unofficial has gone to 80 or to 90. So where is the unification now? One is at 380, the other one is at 470. And my fear is if central bank wakes up now to say tomorrow, to say official has become 450, we may be looking at an official of 550.
550. So
the game of unification, as far as Nigeria is concerned, there is no regime that has won that battle. Or that has succeeded in the unification.
In your opinion, Prof, why is it so? Why is this such a tough?
It's question of demand and supply. You know, the position of a country in terms of the foreign exchange reserves determines the respect and the recognition accorded to that country among the Committee of Nations. There are even some scientific ways of determining the state of health of your economy based on your foreign exchange reserves. And a very simple one. Your foreign exchange reserves must not fall below your 6 months import bills. In other words, if as Nigeria, we import on the average $5 billion worth of goods and services, all categories, in a month, then we must at any point in time have 5 times 6 billion dollars in our foreign exchange reserve position. If it falls below, we start having problem with our trade partners. That what happened to Nigeria in 1984-85 when the General Babangida regime eventually introduced a structural adjustment program in 1986 to correct that. We lost our creditworthiness among the Committee of Nations. So what the central bank can do, you can't print dollar, unlike Naira. So we need to look inward and ask, how can we generate more of this dollar? How can we conserve more of this dollar? Then we look at the non-oil sector. Where can we generate more and more? Is it agri? Is it manufacturing? Is it through services? Recently, we saw figures on remittances and so on. How can we encourage this so that we earn more? Then how can we conserve what we have in the area of consume what you produce what you consume, so that we spend less on import. So net, we can have some buffer that we add to our foreign exchange reserves. There's no miracle that can resolve it other than serious thinking. Some will say thinking outside the box. You can even think without any box. So those are the things we need to put together to be able to now see an economy whose state of disequilibrium is being gradually and systematically managed. It takes time.
But Prof, as we said, this has been a recurrent problem, regime after regime, administration after administration, even central bank governor after central bank. So do you foresee us ever coming out of the woods when it comes to the issue of foreign exchange?
We can come out of the wood. You know, for quite some time now, we've enjoyed relative stability in the value of our currency. But then we got the shock when the price per barrel of crude oil went as low as $21 and so on. And that accounts for about 90% of our foreign exchange earnings. So that affected our foreign exchange reserve position very, very badly. And speculators saw that, and they took advantage of it. So the market is stabilizing now. We're on 40-something. And when it is clear that that direction is consistent, and we are moving gradually, speculators will be out of business, then we enjoy some stability again.
Okay, now, Prof. 18 trillion naira revenue target by the government in the face of a pandemic. Is this realistic? As some have said, it's one being over ambitious. What's your take?
Well, we are talking about what government is trying to amass, and we are talking of 18 trillion. I don't know where that can come from. I don't know, because if we aggregate what can come from all the revenue generating agencies of government in the country, I am not sure we can even hit 10 trillion. So 18 trillion over what time space, I think is not just ambitious. I can say that it's unrealistic.
On that note, sir, I'd like to say a very big thank you, Prof.
Thank you
for
very
always
much.
finding time to talk to us on the program and educate a lot of people on that topic of discourse. Thank you so very much, sir.
Thank you very much.
Welcome back. Moving on, we now bring you highlights of Naicom seminar for insurance journalists that took place at the Bristol Palace Hotel, Kano State. The seminar was well attended by insurance journalists from Lagos and Abuja. Happy viewing.
The National Insurance Commission, Naicom, recently put together its annual seminar for insurance journalists in Kano State. The seminar is the first in 2020 and the very first since Mr. O.S. Thomas assumed office Commissioner for Insurance. Welcoming journalists to the seminar, the Commissioner for Insurance, Mr. O.S. Thomas, implored journalists to give the Commission their full support in their drive to build a better insurance industry.
We need you definitely to assist us in disseminating some of this information and also to inform the public as much as possible of their roles, their responsibilities, not just the benefits that they stand to derive from insurance. It's important the role that you play, the way we keep you informed of this information is important, so that all of us can, by this time, end of the year, we can say essentially that we have a new insurance industry.
The primary objective of the annual seminar for insurance journalists is to, among other things, engender a good working relationship between the Commission and the media in reporting the activities for the year. Leading the opening session of the seminar, Mr. Gbolahan Adewale Motajo, Deputy Director and Head, Research, Statistics and Strategy Directorate, Naicom, said that the Commission is reviewing existing regulations in order to have a better insurance company.
We're reviewing existing regulations, which will be concluded in the first quarter 2020, towards these regulations being issued for implementation. Then there's the market conduct guidelines. Is also an important focus in 2020 to ensure appropriate conduct in the insurance market, to promote fairness and transparency between policyholders and insurance institutions, to enhance ease of doing business. This review has been on. It is expected to be also to be conducted in the first quarter 2020. And the guidelines will be issued for implementation.
The panel discussion at the seminar focused on the current recapitalization exercise and other issues. Panelists were Mr. Barineka Thompson, Director, Inspectorate Naicom, Mr. Pius Agbola, Director, Policy and Regulation, and Mr. Leo Aka, Director, Corporate Governance Enforcement and Compliance. In his presentation, Ms. Agbola said that the biggest challenge for the Commission in 2020 is how to develop a workable framework for the enforcement of compulsory insurance in Nigeria.
Now, the first two stages, that's what we have been doing for the past 8 years. Are we okay? The first two stages, awareness and education, collaborative initiatives, what we have been doing for the past 8 years. The third one is the most important, and we have not been able to get it. That is development of enforcement framework and issue guideline. As I was sitting there, I was just thinking that if the smart correspondent can come up with a framework, I can decide to forego my salary for the next 1 year. I'll share my salary.
That's a challenge.
If you can come up with a framework, I will not forget. I will forget my salary for the next 1 year. Now, for us to come up with a framework, I'm heading that's the last minutes. We are going to that last. Now, for you to come up with a framework, it must satisfy the following conditions. 1, it has an element of driving force. 2, it does not breach any section of the existing law or regulations. 3, it provides platform for collaboration among many stakeholders. 4, it does not transcend any of the insurance institutions, either broker, either agent, either insurance company. And lastly, it benefits all the stakeholders. There is something in it for everyone. So, the crisis we have, or the question, or the assignment for you now, is that we want to develop that framework in 2020. Whoever can help us do it will give you the person a good price.
You are aware, like my commissioner will always say, that companies do not die when people kill companies. I'm sure you will agree with that. Companies do not on their own die. People kill companies. Before now, most of the challenges we have had in the financial sector are all, if you ask me, I can summarize to say poor corporate governance. Unfortunately, it is usually discovered when it's already late, too late. Now with the code, the new code, we want to leave them on the board. As we identify it, we work on that. That corporate governance guideline which the Commission will be releasing most likely before the end of next month or thereabout, because definitely it is going to start by March this year. That's our own sector. I'm not too sure what the other sectors have done. Of course, there are a few highlights things on the issue of tenure for some groups of people and all that. But just note that we are almost done with the code.
The high point of the seminar was an open forum where journalists were given the opportunity to ask questions.
Recently, we were at a program on agri insurance. There it was alleged, I think the representative of Rice Farmers Association, RIFAN, alleged that banks often withhold premium paid by farmers. And what actually caught my attention was that when this premium withhold, then when the risk crystallizes, the bankers will now carry the premium to underwriters, and the underwriters will take the risk. We even query them there, say where is the place of no premium, no cover? I don't know whether Naicom is aware of this, because why we are concerned was because agri is like the new business now for Nigeria, and there are a lot of potentials, as we are meant to know in that program, that the industry has a lot to gain. But if we are starting on this note where the thing that we thought would bring business to the industry, which is this concept of no premium, no cover, is being crucified at this level, I want to know whether Naicom is concerned, or whether that has actually reached your table and what you are doing about it.
Mr. Bola said some companies have actually called for them to be inspected, which means that they are ready. So we would like to know how many companies have called for that. How many are ready? How many companies are going to be standing alone? We've heard some companies tell us that they've met the minimum capital on their own. But we'd like the regulator to also confirm for us which of them have been able to meet the capital on their own. I meant Midway. Let me not mention the Cornerstone has also told us that. So we want you to confirm that for us. Number two, what is the total asset of the insurance industry? The total GPI, paid, unpaid, and every other indices that we need to know and work with. On the collaboration with other sectors, you listed some of the things that you've been doing, working on. Joint committee on Naicom, PENCOM, or retiring life annuity. Discussions with CBN and NCC on alternative distribution channels. Discussion with the SROs on palliatives for insurance companies on the camp. I want to pick on, this we have known about for years now. So we will expect that you will tell us exactly what you've done, what you've achieved in these areas. Especially the B part, that's the discussion with CBN and NCC on alternative distribution. Sometimes ago you stopped a company that had already started from continuing. So we want to know exactly what you have achieved, what you've been able to come out with.
2020, no doubt, will be a busy year for the Commission as the current recapitalization exercise is expected to be concluded by December.
That's our time on the program this week. Many thanks for being a part of it. Join us again, same time, same station next week for a fresh package. In the meantime, feel free as always to connect with us on all our social media platforms. Go to our YouTube channel. There is so much for you to see and enjoy. My name is Lucy Olube, and until next week, from the entire team, it's goodbye.